is the property market crashing and will Australia go into recession? Take that wherever you want to take it.
Well, there's two questions there, right? So one is obviously about the recession. About a recession, I actually think that it's likely, yes, but I think everyone just needs a little bit of context around that, right? What is a recession, right? A recession is technically 2 quarters of negative GDP growth. We've had recessions recently. I think we had a recession, was it last year or the year before?
Yeah, it was 2020.
2020,
yeah.
Right? So all good, right? It's not. There's a big, massive difference between a recession and a depression, and I think that the reality of the economy is that we poured a load of we started driving really quickly in our economic vehicle. We poured a load of fuel into it, hit the gas, started going really fast, right? Probably have got a few speed wobbles, i.e., inflation, right? Need to put the brakes on a little bit, right? That's probably going to cause the engine to backfire a little bit, right? And then we'll be able to put the gas on again. So. And do I think it's likely that we'll end up in have a recession? Yeah, I do. But you also got to remember, you also got to have that in context, because 2 quarters of negative GDP growth is one thing, but you also got record low unemployment rate, right? So it's not like, people hear the word recession and what they have in their mind's eye is pictures of people walking around the streets panhandling. I've got no money, help. It's like, come on, we got unemployment with a 3 in front of it, for crying out loud. We've still got $430 billion in savings in businesses and personal bank accounts. So, life's pretty good here. So, could nationally our GDP productivity go down? Sure, right? And would that be a response to interest rates and inflation, a load of other stuff? Sure. But do I think that's the end of the world? No, I don't at all. I'm not. And again, kind of like the whole interest rate discussion, I'm not concerned about that. It does there's the consumer sentiment portion of it. As a business owner, it's like, okay, how is that potentially going to affect people's spending behavior? But in the practicality of what that means, I'm not too worried about it. So
I'm in the same camp here. I just really think about this is when business owners hear terms like recessions, I think that they forget, hang on, you can still do really well in a recession.
Yep.
Yeah.
While the country might experience a GDP decline. It's like your business can boom. You can actually grow. And do you know what? If your competition is over there stressing about it being a recession, this might be your chance to take market share.
Dude, I couldn't agree more. I really couldn't agree more. So, as it stands today, as we record this, I think we could all agree that there's some economic uncertainty, right? So, inflation's up, which is the first time inflation's been up that most of us can remember, because it's actually been below where it needs to be for a really, really, really long time. So for the very first time, inflation is up for a lot of people. It's the first time they've experienced it since they've been spending their own money, and it's maybe, all of that kind of stuff. So it's like, oh my God, this is weird. And interest rates are up. Oh my God, that's the first time that's happened for what most adults, right? That can remember. It's like, oh my God, this is all different. But it's sort of like, does that in the spectrum, how do I play that? I think that people are overweighting what that means versus just making better decisions.
Yep. And it was actually interesting when I was looking at the statistics that support this. Australia was so stable for the 6 years leading up to the pandemic, from a GDP or a growth of Australian economy, it was a 1% just consistently. Yeah. And this is this blip on the radar of when it's gone down and then up with a whole heap of stimulus. And now it's kind of okay, well, where does this land from here? So you would have seen in the news and mainstream media, property market's going to crash. This recession is going to smash us. I almost think that the messaging is we're going to go into a depression, not a recession, right? Which is the panhandling, et cetera, that you're referring to, Goose.
Yeah.
So if we hit a recession, property prices, property market, is that going to crash and everything's going to restabilize just like the share market did, just like crypto's done? People with businesses that sell discretionary products who might not have as much demand. Is this where it's going to go? Is property just the next domino to fall?
No, I don't think so. So, like in any market, and back to kind of Charlie's point earlier, it can be a really good opportunity to grow. Depending, because different businesses, different property markets, all of that kind of stuff behave differently, right? And so, if you can use these opportunities where people are not thinking clearly, let's just say that, right? You can use those opportunities to take more market share, grow, and be better off for it, right? So you've got to really think about what does a recession mean for property. So People get concerned about recessions or economic declines or financial uncertainty or economic uncertainty or any of these kind of periods because what they hear and see in the media is that everything's going down, everything's crashing, right? Often that sentiment is driven by share market declines, right? That's actually the thing that predicates the perception because it wildly fluctuates. And it's like, oh my God, the ASX is down by 5%. And, so then people use that as a proxy for all of the businesses are crashing and failing and everyone's going to become unemployed and it's all going to go to hell in a handbasket, right? But that perception is just wildly incorrect, right? So firstly, if the value changes in a share market of 5% in a day, right, fairly certain that most of those underlying businesses haven't actually changed, right? It's just the perception of value or the perception of how people want to spend their money. So what does change is consumer sentiment and how they want to spend their money. So to your point, right, consumer discretionary spending, am I going to go and buy a luxury car? Maybe not. Will I consider how often I'm eating out? Probably. These kind of things. So when economic times are booming, luxury car sales and stuff go up because everyone's like, yeah, look at me. Let's go buy a nice car. Let's go buy a bigger house and all of that kind of stuff. What happens when people enter into an economically uncertain environment is that they then start thinking about what is the best way for me to use the resources that I have, right? What is the best way for me to use my time, my money, and my knowledge, right? Because effectively, you only ever have three currencies as a business owner, as a non-business owner, whatever. Right? You've only ever got three currencies, all right? And that's time, money, and knowledge, right? And so you can then work out how you're going to distribute them in the most appropriate way. Now, the benefit of real estate, right, is that, and I know it sounds so cliche, right, but it is safe, right? Safe as houses and all of that kind of stuff. And so what tends to happen when people feel uncertain is they then start going, okay, where can I put my money? Like if inflation's going up and the value of your cash is going down, do you want to keep it in the bank? Probably not. Are you going to put it into shares? Well, God, I mean, that seems like it's all going crazy and everything's failing. Are you going to put it there? Probably not. Are you going to put it in crypto? Oh my God, that's all going down and everything. Probably not, right? So then you're really left with not many choices about how you're going to use your money, right? And certainly you're probably not going to be thinking, let's go and go out to 5-star restaurants every day if I'm not sure what the future is going to hold. You're going to be thinking about how can I best utilize that capital. So what tends to happen is people then have a flight to security. So one of the benefits we have in real estate, particularly in Australia, is that it's a good performing asset, but it's also really safe and really stable and it moves a lot slower, right? And so if you look at, like, for example, back in 87 in the stock market crash, then what happened to real estate in 88, 89? 35% growth, right? What happened during COVID, stock market crash? What happened to real estate? About 35% growth, right? So what tends to happen is people shifted, and we've actually seen this as well, of people starting to come to us now and they're saying, I've been invested in shares, but actually I'm not into it. I've cashed out all my shares and I need to go put them into something else. Let's go put it into real estate. Now, where it does get affected, right, is on that affordability spectrum. So we actually did some research because right when, recently the share market actually did crash by like 5% a day and all of that kind of stuff, right? And so it was like, what is going on here? And I'm a human being, right? I'm a human being just like you guys, right? So I said, oh, hang on a second. I should pay attention to this. What's going on here, right? And is this the start of a problem, right? Not panic, not freak out, just like, is this the start of another economic situation like the GFC, right? So walk with me here because I'm going to walk you through some research. So I went back and had a look at the national median sales price growth rates, right? So basically property market growth rates back to 1993. And I had a look at all of those trends. So we divide the country up into 15 regions, so greater capital cities and regional areas, right? So each state split into two effectively, right? Now, what is really interesting is that the last time that unanimously all 15 markets in Australia declined in their national median sales price growth, i.e. the growth rate went down in all markets, was the GFC. Isn't that interesting, right? And so you might say, well, oh my God, so we had a major economic event which led to a recession, which it did, right? Because we've had other stuff going and we've had other property market declines like 2017, 2019, whatever. But that was the one that was correlated with a major economic event, and that was the one where all markets unanimously kind of did the same thing. The growth rate went down in every single one of them, which is a really interesting thing because that doesn't normally happen, right? So the natural implication from that might be that if there's a recession or a major economic event, that all the property markets might go down. But here's some really interesting stuff. When we actually dug into it, what we found is that even though unanimously all markets, the growth rate declined, right? 63% of suburbs in Australia, the property values went up. 63% of suburbs, when all markets were going down in their growth rate, 63% of suburbs went up in value. What we actually also then further found is that the upper quartile of properties, or the upper third, we'll call it, the upper third in terms of price of properties declined by an average of 7%. They went down in value by 7%. And the lower third went up by about 9%, right? And so what that shows us is a couple of things. Firstly, that even though markets on aggregate might move in a direction, that doesn't actually show what is happening underneath. And also what it shows us is how people behave in economically uncertain environments. What they tend to do is they move their capital towards more affordable assets. They move their lifestyle towards more affordable assets. So we usually see upward people spend down, right? So they buy down, which puts upward pressure on more affordable assets. And there's two reasons for that. Number one, actual affordability. So home ownership affordability, cost of living affordability, all of that kind of stuff. And also the relative cost of the property versus the rents that you can achieve from that property, i.e. the yield, right? And so in an environment where you are not certain about what the economic future holds, you want to own assets that are going to produce more income than they use, right? Which means that you have to have the right ratio of income to cost on those assets. And that typically happens at a lower price point. And I'll give you guys an opportunity I'll catch a breath in a sec, right? So the interesting thing about that is that there is an inflection point, right? So if we look at what the median prices were back in 2008, because we actually studied this segment of time from January 2008 to July 2009, because that was the period that all of that stuff happened, particularly in the property market. The median prices at that point were a lot lower, right? Now, if we transverse to what the average median prices were in those segments, so for example, in the upper kind of third, the median price was about $500,000. That now would be the equivalent of sort of like $1 million-ish, right? Roughly. Now, interestingly, property markets behave very differently when they are over $1 million median sales price. And the reason for that is they actually start to behave economically much more like a luxury good and much less like a real estate asset, because at its core, real estate is an income producing asset, like a farm, right? Or like a cash flow positive business. And intelligent property investors actually invest kind of like Warren Buffett, right? And so what Warren Buffett does is he looks for assets that are going to produce something, right? i.e. produce an income. And to borrow from him, if he goes to buy a farm and it's going to produce $100,000 one year, and then the neighbor starts to sell decides to sell their farm for half the price, he's still got a farm that's going to produce $100,000 in a year, right? So it doesn't really matter. So you got to look at the assets. And so that distribution of how that works is reflected really well in today's market.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into being a full stack business owner, check out the full episode by clicking the link on your screen or in the description right now.